Financial planning is key to your business growth strategy. Growth brings with it all sorts of extra demands on your cash. We're going to look at how you can prepare your business for growth and ways of improving your cash flow. Good cash flow forecasts are essential to run a business and should be part of your business planning. You need to be sure that you can afford your growth plans based on accurate and up-to-date figures. Before you start financial planning to grow your business, make sure you've carried out a thorough review of your business performance. Then review and update your business plan to reflect your new objectives and targets. For example, check gross margins on sales and consider how they could be increased. At this point, you might be thinking about borrowing or seeking investment to fund your business growth, but there are other things you can do before looking into these options. Start by looking at ways of freeing up cash. Simple budgeting and financial housekeeping can help to boost your cash balance. First, make sure you're up to date with invoicing customers. Next, follow up any overdue payments. Make sure your payment terms are clearly specified on invoices and progress payments soon after invoicing. What about reducing your standard payment period so you get paid sooner? Have you thought about ways of making it easier for customers to pay, such as offering online or automated payment? Think about anything else you can do to facilitate prompt payment. Then, check all your overheads, looking for savings. This is good business management and should be done periodically, but especially if you plan to grow your business. Perhaps you can negotiate a rent reduction or find ways to cut major costs like energy. Could you change suppliers or ask them for a better deal or longer credit? You can try this with all your suppliers, although it can sometimes be better to stick with those you know if they're reliable and provide a good service. Another way of keeping cash flow healthy is to keep stock at safe minimum levels. Keep enough to meet orders or continue with production, but not so much that shelves are full for months. Can you make any savings on your equipment or vehicle costs? For example, if you've bought equipment in the past, would renting or leasing prove more cost-effective? Finally, think about your workforce. Do you need to have employees, or can you use temps or contractors? Now, how you record financial information is up to you. You can use a variety of paper or computer files, or you can get financial software that will help you to prepare cash flow forecasts and make it easy to update your projections as market conditions or sales fluctuate. Of course, making the sort of savings and efficiencies we've mentioned might not give you all the cash you need for business growth. As well as bank borrowing, there are several non-bank finance options, and these are covered elsewhere on this site. As you start to put your growth plans into practice, it's possible that the business will operate at a loss for a while. Bear this in mind and be sure that this operating loss is manageable and that you're confident of returning to profit soon. So, now we've seen how growing a business has cost implications and how you need to do everything you can to strengthen your cash balance and improve cash flow.